Hey, stock traders and investors, welcome back to another video prepping you for the week ahead. Today we'll be taking a look at several different stocks as well as the U.S. markets in general. With that said, we're going to be taking a look at SPY. We're going to take a look at some other ETFs, some industries and sectors that are looking interesting right now, as well as a macro view and some of the sectors that I think could be a little bit stronger and some stocks that I have my eye on. As we get started, if you could hit the thumbs up button and subscribe to the channel if you're new, it would be great, and I'm glad that you're here. All right, let's jump right in. So S&P 500, taking a look at ticker symbol SPY. Nice little rebound the last several days here from these lows that we put in around 633, 634 on the SPY. A little bit of a sell-off on Friday. I do think that the NVIDIA earnings, there was such high expectations with the stock. We can just pull that up really quick. NVIDIA stock here just completely on a parabolic run here recently, but pulled back towards the end of last week. And I think that the whole market is watching this stock right now. Of course, this is one that I own as well. I was fortunate enough to be able to pick up some shares during the sell-off that we saw earlier this year. And you can see that post earnings, even though they had pretty good earnings overall, we did see the stock slide a little bit towards the end of the week on some concerns that data center revenue growth for the company was just slightly less so than expected in some ways. And so the market took that as the opportunity to go ahead and sell off. So I'm taking a look at NVIDIA as, of course, a barometer for tech and the AI trade, which is huge. You can also see it reflected in the NASDAQ, which took a little bit more of a tumble on Friday than the SPY. You could see down 0.6% for the S&P, down 1.16%. And, of course, the RSP and Dow Jones down a lot less. I thought this was worth mentioning because we are in this sequence here recently of seeing some rotation. And what I mean by that is the RSP is an equal weighted S&P 500. So it takes a look at, the same 500 companies, but instead of allocating a ton of it to NVIDIA and to Apple, it equally weights the 500 different companies. And in this case, you can actually see that on Friday, you had pretty decent performance, or it just stayed flat, where the rest of the market or the weighted index, the SPY and the QQQs, were down a good bit. Also thought that was interesting. You saw on the Dow Jones a little bit of a hold up here, nice outperformance relatively on Friday. And if you've been watching my stocks channel here, I've been talking about this recently, where I think that you may have a little bit of this that continues for a little while. Tech stocks have been so hot. They've been so strong since the rally back. And I do think that there is a possibility that you get kind of a pullback broader in markets. Of course, the market right now is so built on technology, and I do think that you have this room for a corrective pullback. I've also been highlighting my main concern or reasoning for why that is based on the macro. And I figured we could actually do a little bit of high-level macro stuff here and then work our way down to some individual stocks as we prep for this week. So what you're looking at here is the A1 stock box. We're looking at the macro screener, which helps us to look at a collection of U.S. economic data. Now, if you're not a macro person or an economic data person, just sit tight with me. I'll try and keep this high level and basic because I want to get into some companies. Basically, the macro screener looks at all of the major economic data points that the Federal Reserve kind of quotes the most often, like the major ones, like GDP growth, PMI statistics, retail sales numbers, consumer price index, which is an inflation measurement, the producer price index, PCE numbers. So you get all these inflation measurements, as well as some growth metrics. So as we're looking at these growth metrics and we're looking at the jobs data, for example, down here, what this chart does for us is it essentially aggregates the summary, right? So if I'm looking at all these different statistics, I'm saying, well, GDP came out better than it was expected to be, but manufacturing PMIs came in a little bit worse than expected. And then we kind of take a look at all these different economic data points. The long story short is we've got a little bit of stickiness in inflation, right? The producer price index number that came out the past 2 weeks was a little rough, right? Scared the market a little bit. Of course, we had the PCE number this past week, which came in line with expectations, which, neither here nor there, but still at 2.9%. So we've got inflation stickiness to some extent in combination with some slowing economic growth metrics. All of this to say, the stock's impact chart here is getting about a 45% score. Now, what does that mean? That just means that about 45% of our indicators are suggesting strength for stocks, or, essentially an economy that is very hospitable for stocks. what that also tells me is that it's not a very decisively like, hey, things look great. And meanwhile, we still have stocks, as we just got done discussing, right there towards their all-time highs. So that puts it into a perspective where I'm like, okay, if the economy is seeing sticky inflation and slow growth and slow labor data, maybe my best case scenario is, we still see the overall market continue to move higher, but perhaps in the meantime, there is room for this market to pull back. Again, doesn't mean it has to pull back. The market could keep going, but I'm saying I think that the risk reward looks more attractive if you were to first get some sort of haircut on the stock market, just because, again, with this macro situation, sticky inflation, slowing economic reads, that to me suggests that I don't necessarily want to be buying the all-time high on the S&P 500, right? So I'm going to wait for pullbacks. And I might get them, I might not. But that's what we do in these videos is I'm basically helping to prep, or at least prepare my own thoughts on things that I'm looking to potentially buy on a dip. So now what we can do is, now that we've looked at the macro view, let's go a little bit deeper and we can actually look at some sectors. And this is kind of cool because I haven't really talked about this much recently, this tool within the stock box recently. By the way, if you want to explore the stock box, I'll leave a link in the description down below if you want to try out the stock box or explore its full features. You can also go to our website, a1trading.com, and explore the stock box there. Okay, so I'm looking at the top sectors page. And what the top sectors page does is it looks at that macro data, right? That macro data that we just got done looking at. And then we see that the top sectors is going to score individual sectors based on that macro data. So let me explain that a little bit differently. Basically, we have utilities, financial services, regional banks, real estate, semiconductors. We've got all these different sectors and core industries to the market, right? Because, like, of course, for example, tech, like we have Microsoft as a tech company, right? So even though, we may end up looking at Microsoft shares, we do want to look at kind of the bigger picture. I like to be sort of top down in my approach, where I am, I'm yawning, I'm making this late at night. Basically I want to look at the macro first, and then I'm going to look at the top sectors based on that macro. And so when I look at this, long story short, the score column is going to be looking at all of those things that we just got done discussing and actually rank and filing actual individual sectors or industries. And we have their corresponding ETF or symbol here, right? So the way to read this right now is that across the board, that kind of lackluster economic report that we just got done looking at, with that in mind, right, we're now looking at the top sectors, and the top sectors is showing you that most sectors are in the negative, meaning the data, things like GDP statistics, PMIs, all that stuff, is generally not super favorable towards individual or into the stock market across the board. Areas that are looking better than others: utilities, financial services, regional banks, gold miners. These are things that are getting slightly higher readings within the stock box. So what we can actually do from there is we can then go to our next level, which is we can do the top-down analysis down to individual companies that we like. So if I am specifically interested in potentially getting some utility stocks, we can pull up here, and what we can see is we've got CEG, XEL. And I actually I prefaced this, or before doing this video, I actually looked at XEL. This is a stock that I owned for actually quite some time and did really well with this stock previously. So I wanted to look at this one a little closer. This is right in the right spot for me, right? So it's a bit of a more defensive name, electric utilities. I think that there is, good demand for electric utilities for a number of reasons. One of the big ones, energy, just the whole grid system in general with the AI stuff. There's a huge demand for energy that I think is not going anywhere anytime soon. And so I do like the idea of building out my portfolio a little bit with more energy companies and industrial companies. Utility companies, right? Of course, the grid sort of stuff. Anyways, if this stock were to give a little bit more of a pullback, this could potentially be one that I'm looking to buy. So specifically, I'd love to see a pullback down into like this 71.50 level. Perhaps if we get this move this week, this could be a possible trade setup for me. So I may look to buy the stock on a dip. Let's keep going. Let's look at some more. CEG is another name here. So if I'm pulling up CEG, again, basically sitting right there at a support level. This may be a possible trade for me as well. I like this area of multi-month support. Again, this is Constellation Energy Corporation, which could possibly be one that I add to my watch list. So there's another one for you. Again, industrial companies, not very exciting, but in terms of my perspective of the market being a little bit expensive, a little bit of froth out there, my cautionary stance would be, okay, maybe I'll actually pick up some utility companies, collect some dividends in the meantime, and see if I can catch a little bit of a market rotation. Again, if we were to just broaden this out, we can take a look at everything. Top stocks in general does not necessarily look at economic or macro reads, right? It's going to look more at financial readings, sentiment, and technicals. So it's kind of that optional. If you're using the stock box, you can say, okay, top sectors, maybe I only want to filter for utilities. Another one we could do is financial services. So if we go back to top stocks and let's just do financial services, right? So we have ICE, Intercontinental Exchange. We have Coinbase, Robinhood. So you have all these names that are kind of showing up here. I would probably be looking for more of the defensive names to play if I was. Maybe some of the bigger banks could be good opportunities on dips. JP Morgan, however, of course, the name that I like, in the negative here, so -1, so probably would skip on that one. But maybe Bank of America, USB might actually be one. So if I pull up USB here, for example, stock's at the highs, so I probably wouldn't touch it here. But if it were to give me a pullback, maybe a move back down to somewhere like the 44s, this could be an interesting individual stock for me to watch. So we'll see if we can get that pullback. Of course, Hood is a big stock that I own in my portfolio, although I have been doing some options on this one here recently because the stock, to me, does still look a little overextended. So what I've actually been doing is I've been selling calls against my existing, I own 600 shares of Robinhood at around a $40 per share average. So I've been sitting in this trade for a little while. It's been going really, really well. Definitely my top stock pick of the year. And so I do still think that this stock is a buy. Personally, I think the company has plenty of room to continue to expand, although just my overall macro perspective, a little bit cautious on the stock, and I do think that we could kind of consolidate maybe sideways for a few weeks to a few months' time. If we do pull back into the low end of this range, again, if the economy starts to look a little bit better, if you get some good jobs prints like the one we've got coming up this week, if we get good NFP data, that could shift things a little bit. So maybe if we get a dip further under the 100 level on Hood, could be one that I watch again for maybe either. I probably won't add more shares, just to be honest, just because I do have such a good size position already on this stock. But that would be a trade if I was looking for one. CBOE is another one I think is interesting. Probably cooled off a little bit, I would think, with the lower volatility. Yeah, you can see stocks pulling back. This may actually be an interesting one to watch. You've got some pretty interesting support right around current levels. So we'll see how the stock price comes here, but this could be potentially one that looks a little interesting. I do think the cautionary tale with brokerages are they just in general are a little bit more cyclical, right? Because of course, if people have a little extra money and the stock market's doing well, there may be a lot of money flow, a lot more money for the exchanges to do really well on, and vice versa. So another one, Visa, really popular. If I just pull up Visa here, obviously like a really easy, in my opinion, stock to buy on dips, just because again, it's connected to the American consumer. But of course, that is also cyclical. So if you get a down, recession or something like that, this sort of stock would definitely get hit. But again, maybe worth a potential trade here if we can get it to pull back a little bit further. Let's just broaden out here a little bit, see what else we've got. Meta, of course, a stock that I own a good bit of shares in already, but just wanted to keep an up on idea on this one. Of course, is a really popular stock as well. You've got some support around current levels here. We'll see if it does pull back further. I do like this level of support around $700 per share. But again, stock looks really strong overall. We are off the highs by a little bit here. Again, that's only about a 7% drawdown. The stock is prone to pretty good sized pullback. So if you were to get a 12.5%, honestly, that would be a little bit more attractive to me for possibly adding more shares to my position. I own 60 shares of Meta. I would like to own more than that. So may look to add on a dip if we get it. Oracle's another stock that's kind of been in the news here. Or at least it's been really hot. The stock's been really, really impressive since that April sell-off, but has kind of taken on some a beating here, which this I wanted to get into is a little bit of something that I'm a bit cautious on, is that you have a lot of the market leaders that have been leading the rally really cooling off. So for example, Palantir, right? So Palantir had a drop of 25% at one point here. Again, these are the market leaders, right? Palantir, Oracle has been another big winner for the market here recently. Of course, NVIDIA as well, having a little bit of a slowdown here. I would keep an eye on some of these stocks because, again, they're so critical to the market's optimism right now. If you do start to see NVIDIA breaking 172, Meta too, right? Meta has also been a big winner in this. If you start seeing Meta break, 700 to get back into the 600s, I do think that would be a little bit of a warning that the market may have some time to cool off in front of it. And I do see, again, these are companies that I love for the longer term, but I do see several of them kind of breaking structure. Take a look at like Netflix, for example. Not actually, I guess this is not as bad as I thought it was. You have had a little bit of slowdown, but I guess stocks kind of been consolidating a little bit. Microsoft, we could take a look at this one. Of course, another huge name, really big Mag 7 name. Definitely not like completely broken by any means. Stock has just stopped going straight up, which is not necessarily bearish. Coinbase, however, this might be a good one to mention. So Coinbase has lost at least its trajectory, right? Coinbase, a very popular stock as well in the retail world, has sort of lost its momentum on this front. Another retail name that we could take a look at is Rocket Labs. Let me see, Rocket Lab Corporation. Stock actually holding up really well. So this maybe not so much as an example of a concern of any sort. Just take a look at some of the sectors here. In general, you have consumer discretionary actually holding up pretty well. Still kind of a relative underperformer in some ways. Consumer discretionary just not as popular here, of course, with concerns around tariffs and inflation and all that sort of thing. Comm services doing really well. This is XLC, right? That's going to be your Metas and your Disneys and Googles and all those big communication services companies. They've been doing really well. Basic materials, industrials have been doing pretty well as well. I mean, this has been a pretty impressive bounce back that we've had in industrial stocks, up 34% from the lows. So it's to me, I think that there are some bargains out there, some opportunities to buy stocks, but it is getting a little harder than other times, certainly. Take a look at Dollar General. This is another stock that was on my watch list here last week. Dollar General is, again, of course, very sensitive to the tariff situation. Stock has not traded very well in many years. For a long time, it was a darling of Wall Street stock. I mean, this thing was super popular for a very long time and completely lost its candor, if you will. But I do think that you may be seeing a little bit of a reversal, and there are turnaround stories that can be multi-year in nature. So I think that you're sitting just shy here of this support level. If you did get a little bit of a pullback, this would be coming back to that gap open area where we did previously find support. So we'll see how the stock trades there. Dollar General, if we go back to the top stocks here for just a second, you can see it's trading decently well in terms of valuation. You've got decent price to sales relative to its 3-year history, revenue growth, earnings growth, good performance there relative to 3-year history. ROE and debt to equity are a little bit less attractive. And of course, if you want to break this down further, what you can do within the stock box is you can just go to the stock analyzer tool. So if I want to go look at this closer, if I want to look at Dollar General, right? So I can pull up DG and then I can take a closer look at each of these things and what they're looking like. So like, for example, debt to equity, a little higher than usual, getting a negative score there. If we want to look at return on equity, a little bit lower than usual, negative there, right? So, but then there's positives, right? Price to free cash flow looks okay. Dividend yield looks good, right? So we can look at that and get an idea of how the stock box, again, is scoring each individual company that it's showing up in the top stocks page. So just a little bit of behind the scenes. Again, I highly encourage, if you want to check out Stockbox, you can do so down below in the description. Check it out. We've been working a lot on getting this product up and running, and I'm pretty excited with where it's at already. Take a look at Amazon, of course, another big name, AMZN. Stock that I own, really like Amazon as well, and I do actually think that on a relative valuation basis, stock looks okay. Like this is a pretty good example. If I go Amazon, again, it's not a cheap stock, but it actually trades relatively low compared to its 3-year history. I think this is cool. So if we take a look at the TTM PE ratio, right, so the trailing 12 month, it's trading around a 35 compared to a 3-year average of about 52. So if I go look at, for example, I can go deeper. We can go into our, let's go financials. And then what we want to do is we want to look at, let's go PE ratio. And then I want to select for Amazon. So if I go, there it is, Amazon. What we can see here is that the PE ratio has actually been falling. And this is because, again, the company earnings have continued to grow. And so on a 3-year average, stock's actually trading cheaper than it usually does. Doesn't mean it's a cheap stock, just means it's trading relative to its own history at a nice valuation. So what's nice about the stock box is essentially it's spotting those sort of opportunities for you so that you don't have to go look at every single stock individually. Having a screener to do that can be really useful. So that is kind of the kind of main reason there. Clorox or CLX. I actually took a trade on Clorox. Let me say that correctly. Last week, multi-year level of support is getting tagged here right around the 118 to 117 level. I actually sold the 115 puts, essentially saying that I will buy the shares at 115 if the stock drops to that point by expiration. I did a 45 days out to expiration date short put position. Essentially, if the stock bounces, it's a bullish options bet. So if the stock bounces, I'll make a nice profit there. But I also would not mind buying some shares of Clorox. Again, companies like this have been very out of favor. The market is very poised for growth stocks and tech stocks and exciting growth names, and stuff like Clorox is not exciting right now. But to me, I think that the market, again, is a little bit due for some pullbacks. I'm not necessarily outright bearish the market, but I think there's a little bit of room for corrections and pullbacks. And so in the meantime, I'm trading stocks like Clorox, right? I like these sorts of companies that are just stable, boring companies that I think you can do just fine with if you find the right entry. And so I look at a Clorox and I think I'm getting some decent value here. Look at the financial ratings. They're all green, right? So essentially Clorox, of course, with the stock selling down, it's getting valued as a cheaper than usual rating on a lot of these things, which again, makes me a little bit more interested in the stock. Momentum is definitely to the downside, so I'm fighting the trend a little bit here, but I do think on a longer term basis, I could do okay with this stock as more of a longer term hold if I need to buy the shares due to my short put position. So again, some boring stocks in the rotation right now, but that is to me perfectly okay. Let's just take a look at some of the stocks that are getting lower scores for fun here. So these are things like MO, right? So MO, what it's saying here is essentially the stock is expensive, right? Stock is expensive, and there's a lot of them out here. There's a lot of stocks here getting expensive ratings. Tesla, for example, super expensive stock right now. And again, I own the shares, so I've been trying to actually sell calls and get out of some of my position on Tesla. I don't love the risk reward on the stock. I think that, again, financials being so expensive make the stock hard to own. You have several that kind of look this way. Again, feel free to pause the video and look through all these different names that I've got, but a lot of stocks are kind of getting these high valuation flags, and to me that makes me a little bit more interested in selling these names and potentially watching for dips on these names. That is the way I'm using the top stocks algorithm to find opportunities. Again, I think another chart that I wanted to show you guys here today, if we go to sentiment XLY, XLP, what we're looking at here is consumer discretionary versus consumer staples. Right now, there's a really strong, we see this every, cycle where when the market is more optimistic, they tend to buy stocks that represent discretionary companies, right? These are going to be your Teslas and Nikes versus consumer staples, which are really out of favor right now. People are definitely buying more or stocks that are more wants, right? I call this kind of the wants versus needs chart. Wants are in high demand. Needs are, kind of out of favor right now. And so a little bit of contrarian, a little bit longer term, I do think that things could swing back the other direction, that you may get another swing back in the opposite way. So for me, this chart is always one to watch, just to keep an eye on it when it starts to reach kind of extreme levels. I do think it's worth just maybe being a little bit more cautious, or in my case, at this point, maybe even transitioning a little bit more money towards, or the buys that I make in my portfolio be a little bit more poised towards defensive stuff rather than getting too aggressive towards the what I believe to be the potential upper end of this cycle. So again, we'll see if I'm right about that. Again, that's the beauty of YouTube, is I'll put my ideas out there. Sometimes I'm right, sometimes I'm wrong, but I am definitely a little bit more defensive on the stock market right now. And so again, you'll see me favoring things like utilities. I'm also interested in energy if we get some stuff there, if we get dips on that. But a lot of the energy stocks are not super cheap here either. In fact, if we just go top stocks really quick and then we go to sector energy, you can see there's a lot of stuff that is actually pretty expensive. Like ET is a stock that I like to trade. It's gotten kind of expensive here on valuation metrics. ExxonMobil, CVX, and Oxy all getting kind of expensive reads. So these would be names that I'd probably have to avoid and just be a little bit more cautious on at this time. So that's something to think about here is playing by sector, looking at the macro. That is what we do here on this channel and what I do in my own analysis for stock trading and investing. I hope this was helpful too. If you want to check out the Stock Box, again, link is in the description down below if you want to try out the tools that we're building here at A1 for stock traders to take their game to the next level. Thanks so much for watching, and we'll see you in the next video.